G'day everyone. Welcome to Leverage episode 23. My name is Damien Johns, proudly sponsored by ASICS, and this is Lewis Bell. How you going, mate?
Bloody good, thanks, mate. I'm currently looking for new sponsors, so if anyone out there wants to put their hand up, then
Well, ASICS. Yeah. Did I mention my sponsor, ASICS, tonight? No, just kidding, everyone. I'm not sponsored by ASICS, but it's only a matter of time before I am. Good week, mate.
yeah, good week. Good week. How about yourself?
Yeah, good. I put my ASICS on and went to work today, and all's good.
Oh, how many times you got to say it throughout the episode?
Enough. Hey, how is everyone? Going good? Give us a pump up in the chats if you're going all right. If you need a big brother or something, then Louis there for you. More than happy to help out. You know, if there's something happening in your personal life, Lewis is always good for a chat. If you're watching this recorded, that's total rubbish. And just make contact with me and I'll try and help you out. A few familiar faces here. How we going? Be nice to see some old faces popping in to say hello. G'day, guys. But yeah, look, interesting week for Bitcoin, Lewis. Interesting indeed.
Very interesting. We got a bit of action this week.
Bit of action happening.
A few bears got silenced this week, I think, and for the first time in a while, I think I've got a bit more of a bullish bias myself. So
yeah, it's easy to. I like the way two people are throwing something in the chat. Give us a pump up in the chats if you're going all right. It's like two people. How you going? That's good. It's like a teenager. How you going? Good. What'd you learn today? Nothing. How you going? Good. Want something to eat? No. How long do 2-minute noodles take to cook? 2 minutes. No, they don't. 15. Got to boil the water. That's the way it is. But look, I know them well. So what we've got is a change. We've got a dead set change, macro and micro. So it's one of those things that we all wish that we bought Bitcoin when she was down at 15, but will it return is the big question on everyone's lips. So I don't have buyer's remorse yet, but with everything that's going on in the world, you obviously can't forward plan and predict, money being printed just for love and people bailing people out and all that kind of stuff.
They will print more money. We can predict that.
No, we can't predict that. So we'll have a look at that.
They will print more money. Let's be real.
They will, and they'll love it. But it does have an effect and a flow on Bitcoin. So we'll break that down for you guys and have a look, answer any questions. Obviously, we are not financial experts. Anything we say cannot be taken as financial advice, but we are just a group of traders having a chat. So
look, it's financial advice anyway.
Hey?
But everyone takes it as financial advice anyway.
Oh, well, that's up to them. I can't control. Hey, I can lead a horse to water, So let's just have a quick look at the Bitcoin. And then I'll just have a quick look and we can have a chat of what we see. And then I'll throw over to the expert, Lewis Bell.
Yeah, I'll be there. I've got a day off tomorrow.
That's good. Look forward to seeing you there. So what we've got here is how good's our show? Total professional. If we have a look at Bitcoin on the 4-hour, zoom right out, have a look. You can see that she was down once, consolidating through this box through here. Bit of a consolidation box there. She's jumped out of that. So that's at $18,000 was that box and got down to around 15 down there. So around 15,500 there. So what happened was it consolidated and we were able to see that it was gaining momentum through a trend line that happened through there. So if we zoom right in on that spot, sorry, I just have to put out fires as they emerge. What we've got there is a trend line that kind of gave us the impression, and it bounced off the trend line, came back, didn't touch it. So this move was actually fairly predictable at the time. I was probably doing something else because I didn't actually see it live going on. So that move there kind of came as a result of this trend grab. There's a slight change in structure and bang, the bulls come in force. Now, what happened was I was one of the people that got stuck in thinking that, that's a short-term move. Got to this line here, kept going. I just thought to myself, it's going to come back. And it didn't, kept going. So the proof's in the pudding here that we now have a structure that sits around $20,000. So when it comes to your absolute structure. You've got to look at that as your absolute structure. So that's important to zoom out and have a good look at what Bitcoin's actually doing. And we are currently very, very, very bullish short term. If you zoom right out, we're obviously bearish still, but it's turning around. It looks like it's turning around. So it's important to consider when you're taking trades that if you're looking for some sort of a retracement, that's probably your target because of this structure that's been established there. Perhaps it may be slightly lower, maybe through there, but as a conservative measure of target area, you'd be definitely looking to target. If this falls over, you'd be looking for it to come back to 25 and then reassess your trades. If you zoom in more on a micro style level, let me just brush that off. We'll get rid of that. If you're looking more on a micro style level, you've got a bit of a move here that came up pretty swiftly. And what's happened now is we're looking at a bit of a consolidation area at the top. So for me, I'm a little bit cautious whenever we're ranging in this part here, particularly with the big news that's coming on Thursday that Lewis will break down for us in a second. But, these moves, if you look at these moves, like just as general moves, they're flowing pretty quickly. Like the last consolidation area was probably back here. Other than that, we've been moving fairly swiftly up and down. And there's a small little tiny one through here that didn't move a lot. But, if you look at starting to use these rectangular boxes and things like that as a bit of a guide as to, how this thing's moving, then you might be able to create some clarity with respect to your trading. So look, we'll break down some other charts as the night goes on, but what I'm looking at now is if this breaks, where's it going to go? So to do that, you'll zoom right out and you'll find that there's some structure maybe back up here that could be respected. So maybe a line across there. So that's just having a look at this stuff over here, which definitely was a bit of a consolidation zone on support. So, and then she fell through. So what I'm looking at is, if you can zoom it all the way over here, then we're not too far away from that. And it probably tried to get there then. So that number, just so you know, is around 28,800. I'd probably say would be about, like if I really broke it down, you'd be 28,700 to 28,800 would be some area of target going up. Going down, you'd definitely be looking at that. So you're looking at a bit of a position that has, that much movement at the moment. So that's kind of the range that I'd be trading in at the moment if I was looking to trade Bitcoin. Obviously, what Bitcoin does, the rest of them do as well. So you need to be conscious. Well, generally, you need to be conscious of that. So just seeing what this does off the support line and going from there. If you've got any questions, guys, just feel free to throw something in the chat or jump in. If I'm talking and you're brand new, feel free to ask a question because we talk generally. We can't make this a beginner's session every time. So if there's something that you don't quite understand, then feel free to jump in and say something or ask a question. What do you reckon, Louis?
Mate, just watching your analysis, I'm impressed. You're my best student. I think I've taught you so much.
You do, yeah. Look, I thank you, and in my speech for the academy, I'll make sure that you're number one on the list because I'm a big fan of yours, and I do want to thank you publicly on episode 23. So everyone, in the future, if everyone wonders, does Damien ever thank Lewis for all that he taught him? The answer is yes. Episode 23 at around the 15-minute mark.
Oh, mate, you're generous.
All right. So from the apprentice to the master, go. What do you got?
All right, let's go. Let's do it.
I'm the master, by the way. Everyone knows that.
So what is Bitcoin? So it's a cryptocurrency.
Stop.
No. So on a serious note, so like Damo's analysis, I agree with. So what we're seeing, sort of,
can you just say that again, please?
So Damo's analysis could not be further from the truth. So what we want to see, No, so
Yeah.
what we can see on the hourly on these smaller sort of time frames, a lot of very, very bullish signals. So we're trending well and truly above our EMAs, which is a good sign. We're sticking to our 50 EMA, the purple line, very truly, like we tend to do with Bitcoin. It tends to follow the EMAs quite well. So yeah, definitely setting that bullish momentum. So we've found some resistance. So the big question was, can we break through the 25K resistance, which we did with force, kept surging past, and we reached the top here of about 20, I think it's about pretty much 28.5 on the dot. And we've found a little bit of resistance there, and we've had a little bit of a pullback. So what I can see at the moment is just essentially consolidation. So Bitcoin's within this range between about 26,300 and 28,400, so somewhere around that sort of range, and that's the range that I'm sort of watching. So my sort of prediction, so I'd probably be pretty short if we drop below the bottom of that range. So if we dropped out of that range below that 26,800, I would probably enter a short with a target in mind of around that sort of 25 range, something sort of like that. That would be where I would short from. Otherwise, long scenario, to me, like there's realistically, like if we zoom out and look at previous structure, we had this whole sort of section through here where we had volume and volatility. So you could take profits through there, but what really interests me is that we had a bit of a CME gap up around this 33K level. So it's a bit of a gap in the market that sort of hasn't been filled yet. Because typically, like when we talk about CME gaps, it's so if market goes up and comes down through a certain area, typically what we see is if there's a section like that where wicks haven't come into, the market will come up and recover that gap before any sort of continuation down. So what I sort of see is, yeah, we've got this structure between about sort of 28K and 32K, but above 32K between about 32,500 and 3,300 is a bit of a CME gap. So potentially a high of around there. However, in saying that, I'd probably look to take profits anywhere from somewhere around the resistance in this range, so anywhere from about sort of 30K. So where are we at the moment? So on Thursday morning at, I think it's 4 a.m. for us in Queensland, is when FOMC comes, when they have the FOMC announcement in America. So essentially they're going to determine what direction they're going to take with their monetary policy towards trying to beat inflation. So on the weekend, we had a massive pump. Where was the weekend? I think over around here. Coming out of the weekend, sort of, we went from 20K pretty much on. Oh, that's last Monday. Sorry. Apologies, steady there. So this weekend here, so we went from about 25K up to our top of about 28,500. So we're seeing some huge bullish momentum and moves on the weekend, which is really interesting, which shows that there's a lot of new money coming into the market, which isn't necessarily institutional money, which sort of indicates that people are feeling safer to put their money in high risk assets, and a lot of that's driven from what's happening with the banking system in America. So if you've been under a rock a bit lately, there's been sort of 3 major banks in the last 2 weeks that have collapsed. The latest one being Silicon Valley Bank, and the government in America has just come out with a policy which is essentially like a save the banks policy, because they've deep dove into the issue, and they've determined there's, I think the number was 168 banks across America that are essentially in the exact same situation that Silicon Valley Bank was. So one of the major issues with what happened at Silicon Valley Bank is it's essentially a bank run. So people tried to access money, and there wasn't enough liquidity on hand that the bank could pay all the customers the money that they owed them. And when they sort of had a bit of an inquest into why this was the case, they found out that the majority of banks in America are in the same situation, because so many of the banks have their money tied up in bonds, and a lot of the bonds that banks use are 10-year bonds, like fixed bonds and that. So that's not liquid money. So customers' money is essentially tied up in a non-liquid system. So if a bunch of customers all at once want to take their money out, the bank essentially doesn't have money to pay people. Crazy system. Who would have thought? It's essentially what a Ponzi scheme. It's essentially what a Ponzi scheme is, except on a government scale. So, but anyway, so the government's come out and said that they're going to have this Save the Banks bill, which is essentially going to inject up to $2 trillion of liquidity into the market by the end of 2023. So when we look at the numbers, so the Feds had this quantitative tightening policy where they've been raising interest rates at pretty much every FOMC in an attempt to combat inflation. So the idea of combating inflation is to pull money out of circulation, pull money out of the economy. So they tighten up, raise interest rates, so people have less free money to spend. Cost of living, so like cost of mortgages, cost of money, essentially gets more expensive. So your money doesn't go as far, which devalues the dollar. So they're in a position where they're injecting all of this capital back into the market, and just in the last week, they've put something, I think it's something like $250 billion back into the economy, which has undone all of the interest rate rises they did since last April. So the amount of money that came out of the economy since last April has been put in one day. So essentially all of the interest rates and all of the tightening and all of the pressure that's been put on the people in America for the last 12 months has just been undone in a single day. So they're talking about injecting another $2 trillion into the American economy, essentially turning the money printers on before the end of this year. So what's that mean? That means there's liquidity coming into the market, because what we've learned from this banking issue, and it's not just, the interesting thing is it's global. It's shone a lot of light on the global banking issues, because we had the Swiss bank as well, which had the exact same situation, and they were forced to be bailed out by one of the big European Union banks, and they've been a bank that's been trustworthy and operational for something like 168 years, and all of a sudden they don't have liquidity to pay customers. So we've identified that there's this massive issue in the banking sector at the moment. So you've got all of this liquidity coming into the market to try and save the banks, and people now have this mentality that, hey, maybe the banks aren't as safe as we've been led to believe for all of these years. Where do I want to put my money? We look at gold as an asset, because gold was always the hedge against inflation, the safe bet if you didn't want to hold cash, all that sort of stuff. And then we look at how gold's been performing as an asset over the last essentially decades. It's been underperforming, and it hasn't been a hedge against inflation. Like, it was never really, and it's just had this it's been falsely idolized for a long period of time, because people always believe that the US dollar was backed by gold, but the gold standard stopped in, I don't know, like the 60s or the 70s or something. Like, the gold standard hasn't been around for a very long time. So this mentality around, oh, well, if I don't trust cash, I'll put my money in gold. Now, all of a sudden, gold's not a viable option. And when we look at the top performing assets, Bitcoin has now crept into the top 10 performing assets of all time based off market cap. Gold's still number one just because of the volume that's traded. But Bitcoin's now in the top 10. So it's up there with stocks like Apple and Microsoft and some of your big index funds and that sort of stuff. So it's, when we look at where people want to put that liquidity that's going to be poured into the market, all of a sudden Bitcoin's not such a crazy option. So where does that put us moving forward? So I have a really deep rabbit hole theory that I like to talk about with this, but we'll stick to the facts in the immediate future. So we got FOMC in a couple of days. So when we look at I'll bring up a different screen quickly. So when we look at where the market is currently thinking we're going to go with FOMC, where that's not what I want. Yeah, it's the one. Can everybody see that chart? The Fed watch. Can you see it, Damo? Tell me, can you see it?
Yeah, mate, we're good.
Okay, good. Okay, so this is where the mentality sits. So probability for a no basis point rise is now down to 16%. So current rate is 450 to 475. So that's what we're currently sitting at. So the probability of remaining at 450 to 475, according to media and public opinion, that's the stuff, is now down to about 16%. Probability for a 25 basis point rise, we're now looking at about 83%. So the market and media and all of those sort of big influential outlets believe that we're looking at probably a 25 basis point rise on FOMC come Thursday, which is Wednesday in the US for them. But what's that mean for us as traders? So it's hard to say because the Fed's in a really tough position. Further increases to interest rates is potentially gonna make the whole banking system even more unstable. If you choose to cool off and not raise interest rates to tackle inflation, then inflation's out of control. So whichever decision the Fed makes, they're essentially going to be shooting themselves in either the left foot or the right foot, and they just have to make the decision over which one. So it's quite an interesting situation to be in. But what we can see is the market isn't really scared, even with the probability of a 25 basis point rise. Like the vast majority consensus is we're looking at a 25 basis point rise, and the markets are still pumping. So what's that telling you? Like people believe that there's liquidity coming in, and there's going to be room to invest money in the markets, and they think it's potentially a safe option at the moment. So my bias at the moment is probably sitting more towards like a bullish outcome come FOMC. So what I'm sort of expecting come then would be a bit of a pump, potentially up to somewhere around that sort of 32K mark as a top. And then what happens from there, who knows? We could find a bit of consolidation. We could dump. Because I honestly do believe there is a big dump inevitably coming at some stage, because when we're talking about CME gaps and gaps in the market, there's a big CME gap between about $8,000 and $10,000 on Bitcoin right down the bottom. And we've never not seen a CME gap filled at some stage on a chart. So we will get back down there at some stage. It's just a matter of when. Does it come sooner rather than later? Or are we looking at, some other potential narrative? So this is what I'm thinking. If you want my little rabbit hole theory, we're looking at potentially a pretty bullish year ahead of us because there's a big crisis in the banking sector and it's not easily fixed. So potentially an overflow of that liquidity and that money that people don't feel like is safe in banks could flow out into other markets, and potentially bullish market for the rest of the year. What then I would expect to see is the full force of the recession and all of the quantitative tightening and everything hitting at once, and just like chaos, like recession. A recession's inevitable. We can't really avoid it at this stage. It's just a matter of if it's going to be a soft recession or a hard recession. There's risks in the Fed not raising interest rates at all come FOMC, because you're potentially looking at hyperinflation if all of a sudden they decide not to raise interest rates and flood the market with more capital. Like we're potentially looking at hyperinflation, which means like global financial crisis level events once the market decides to react to that. So what we're looking at is potentially a bullish period ahead in 2023, followed by like a big collapse of the markets. And that's
how do we know that these banking crises aren't manufactured for their rollout of the CBDCs?
Well, that's my little rabbit hole theory too. Like to me, like it makes sense, unfortunately, that because remember that we
know they want to go down that route worldwide.
Yeah,
they want digital currencies.
Yeah.
And then all of a sudden, all these banks just start collapsing, and what a perfect time to roll out their new monetary system.
Yep, and that narrative seems more and more as a potential outcome, just because the banking system isn't localized just to America. Like it's all over the world now. They've identified that it's all over the world. So exactly as you said, like how convenient would it be if there's a big market collapse and cash isn't necessarily the best option anymore, because the banks have proven that over the last 12 months. come 2024, hey, here's central bank digital currencies. We're going to eliminate cash, and we're going to govern monetary policy around these digital currencies now, and it's going to be easier to manage, and inflation's not going to be as bad, and all this sort of stuff. Like, isn't that just the perfect narrative to sell? Especially if you crash all the markets and crash crypto astronomically, flood that. Like, there's no denying that that the media controls the narrative, especially the big media outlets like Wall Street Journal and that. You analyze Wall Street Journal, and out of like 98 out of their last 100 articles around crypto have been negative FUD around Bitcoin, stuff that's like not even real, because they control the narrative. So it's like, come the time that they want the market, to dive, and they want to scare people out of crypto, you'll see negative news articles everywhere, scare people away from crypto. Here comes the shining beacons, CBDC, digital currencies, everybody flocks to it.
Yeah.
That's just a theory. But when we look at what's going on in the world and what's going on with banks, there's like the one true thing that we can determine is current monetary policy, current cash systems, current banking systems are no longer viable and don't work. So what's the alternative? Because the whole country is built off banks.
We saw it with COVID, where they just write the rule book as they go.
Yeah.
And
I mean,
who says that they're not doing it now with the banking systems? Just making these banks fall so that they can bring in the CBDCs quicker.
Yeah, like we know CBDCs are coming, so we're not speculating that that's just like something, because every media outlet in every country in the world's done news articles about, these banks are looking at CBDCs, they're investigating the technology, all this sort of stuff. We know it's coming.
But they need the system that we've got now to fail completely for mass adoption.
Yeah,
people aren't going to just freely take it up and go, oh, that sounds like a great idea.
Yep.
A monetary system where the government can see every cent that I spend, oh, that's a great idea. Yep. I'm all for that.
Yep.
They need banks to collapse first.
Yeah, 100%. And I mean, like, if they're talking about rolling out a digital currency, do you think people are going to be more inclined to put their money in the digital currency that's already existed for the last 10 years, or are they going to put it in this new CBDC that no one knows anything about? Everybody has a mate that's talked about crypto.
I'd rather be in a digital currency where what I spend is private.
Yeah. Yep.
Where
exactly.
the government can't trace it.
Yep. 100%. And that's why that narrative is really important as well, to completely annihilate the crypto market and, flood it with FUD, and, it's for drug addicts, and it's for people who, drug dealers and people that are involved in criminal activity and all this sort of shit that we hear all the time. I mean, that's pretty rabbit hole and very sort of hypothetical based on a lot of factors. But I mean, as I said, like, we know CBDCs are coming at some stage. It's just a matter of when.
It's definitely a watch this space thing, though, isn't it?
100%.
You can say all that. At the end of the day, it's going to be a long fight for them.
Yeah.
I can't see it being a short fight. I'm talking decade or two. I don't see it's going to happen in the short term. And in that time, there's momentum in Bitcoin and these decentralized currencies. But you also got to remember that the US needs to also protect themselves against the other side of the world. And
the US need to protect themselves from Joe Biden. That's what the US need to protect themselves from.
Look, they've got China, Russia doing their own centralized currencies now as well, and they've joined teams, and there's money to be made out of that. They're trading partners, so they have to have something there to benefit their current centralized system. And so how that all plays out, who knows? But I don't think this decentralized system is going anywhere anytime soon. And I think I've got faith in it, but at the same time, they'll push to fight it. And I think the global sort of sentiment around this is just we like decentralized systems, Bitcoin. It's a growing popularity, and it's growing quick.
Yeah. Yeah, 100%. It's just interesting to think about all of this sort of stuff, and people, as soon as you talk to people about it, they say, "Oh, put your tinfoil hat on." But I mean, COVID. One of you guys said before, like, COVID showed us a lot of things about governments, and they don't necessarily always know what they're talking about. And we see that now, like the evidence coming out about, masks and vaccinations, and they didn't reduce transmission rates and anything like that. Like and people were led to believe at the time, 100% you need this or you're going to die. Like that was the fear mongering narrative that they spread. And, people are starting to sort of wake up a little bit. It's like, oh, maybe the systems in place aren't necessarily there to benefit me. So people are just becoming more aware. And I think it's really important just to when you're reading articles and when you're, researching and finding information about anything, take it with a grain of salt and make sure you're diversifying and make sure you're getting information from multiple sources. It's just really important to have a really thorough understanding of anything, especially when there's money involved. If you're putting money behind something, you need to have an understanding of, why is this product exist and who benefits from it, and how does it affect me fundamentally.
And it goes back to the original situation in the education that says don't risk any more than 1% of what you've got.
Yep.
Don't risk any more of what you can afford to lose. Only trade what you're seeing. Don't trade by gut. Don't trade by bias. Trade by what you see on the charts. And that's critical at this time when the world is in a bit of disarray. And so 1% stop losses. Only put forward what you can afford to lose.
And
Critical.
a really good thing to have in your head as well is don't trade where you want the market to go.
Yeah.
Like if you're at a resistance level and you see you look hypothetically on this chart, we see a double top. Okay, the market's definitely going down. I'm going to short here. Like you can't just assume you see a pattern and it's like, okay, well, I want the market to go down from there because I've seen a double top. It's not how it works, because when you zoom out and look at overall market structure, you're still very bullish.
Yeah, and there's short-term macro and micro market structures to consider as well. You don't want to just simply say, oh, this is going down because of that double top. Because if you have a look at the move that's the most recent push up and the move that bounces off that EMA, that's actually forming its own bullish trend. It's still up. So you just got to be conscious and careful of that. So yeah, it's one of those things that market structure is the king. Remember that. Always remember that.
Yep.
If it's not changing structure, it's not changing trend.
Yep.
And that's even when you write that down. That's your nugget for tonight. If it doesn't change structure, it doesn't change trend. And again, the trend is your friend, and that's your take home. If you learn nothing else here tonight, then that's the one you want.
Yep. And even when you look at this, just simply low, high, low, high. What market structure is that telling you? It's bullish, isn't it?
Yeah.
So we're still sort of just cruising up slowly. So yeah, to get back to where we are, so FOMC come Thursday, so break above, take profit anywhere from sort of 30k, anywhere up to a potential maximum of 33k if we hit that CME gap. And short scenario, realistically, we know what happens on news events and we know how volatile they can get. So my short zone is below 26k, but potentially you could just see a nosedive. And if you miss your entry, don't try and catch a falling knife. That's a big thing to remember. So just determine what your bias is and determine what you think coming into the event, and just have a look at the structure moving in. And if you want to hedge, you can hedge. If you're not comfortable doing that, just if you miss the initial entry, because as I said, news events equal volatility in a direction, not necessarily specified, not necessarily a specific direction. Just remember, if you miss your entry, don't try and catch it, because chances are you'll end up catching the top. So just wait for some sort of pullback or some sort of entry that you can get in off if you miss that initial move. So, but yeah, that's essentially where we're sitting, and just remember, a rising tide floats all ships. So if Bitcoin goes up, all alts follow. And same thing, if Bitcoin dives, all the alts dive. So if you've got any positions coming into the news event, if you're not confident with the direction the market's going to go, then don't be in any positions when the news comes out. Because regardless of how good the TA looks on any of the alts or anything like that, if Bitcoin moves against you, then the whole market's moving against you. Doesn't matter. There's no avoiding it. So it's just how it's all tied together at the moment, and there's nothing we can do about that. So, but yeah, it's that's my story.
For those of you that are interested in all that stuff, Flo and Catherine and Adam are going at it in the chat, so you might want to read that. Louis, you want me to do a sneaky little market scan and you can have a read through that?
Get on there, mate.
All right.
Show us how it's done.
If anyone's got any questions, then feel free to ask, even if I'm going too fast or something like that Lewis has said or whatever. Just conscious of time marching on. So, change of pace. I jumped in 1 inch today. I can't remember exactly where I jumped in because I did it without drawing a position, but I do have a stop loss and a take profit on. Do as I say, not as I do. But what I'm looking at with 1 inch is that this thing, similar to that one I showed before we started to record, it peaked. So this blue candle here, this is a 1 hour. It peaked, and my bread and butter is trading the fall. So I like to trade the fall. I know I did a bit of analysis on 1 inch on the weekend, kind of broke it down. Whether or not that won or not, that's irrelevant to the fact that this is how you can break down a chart. So that's why I shared that. So what I'm seeing is a bit of a popular zone through here at around 0.48. It's spat up. It's come up to around 58. And then it's come down. So I'm actually playing this down to still thinking that it's going to come down to 4.8 because that's where the structure is. The issue that you have there, though, if you're predicting that, similar to what Lewis just said, is that you've got a structure that this could be it. This could be the bounce. If you look at that line there, maybe that's the structure. Whereas when I originally took this position earlier today, I was kind of more biased down there. So what I'm doing now and how I'm playing this trade out is that if this comes up to this horizontal line here, this horizontal ray that I've drawn, and I've got an alert on it, you can see the little alert. If it comes up to that, I'm going to pull this trade because I feel it'll just keep going. Now, I'm happy with the fact that I've made profits through this zone here. I'm still in the green even if I pull out on that line. But maybe the structure based on this tweezer style wick setup, things like that, maybe, just maybe, it's actually found structure through there, in which case it's bounced. Maybe it'll bounce and come back. That's okay. But if it pushes beyond that line there, I'm out. And if it doesn't, then I'd be looking to potentially re-enter after a bit of a retest and maybe riding it back down to here. So there's still a position there. So therefore, I'm not going to pull out of this trade yet. Like I said, I'm already in the green. If it goes up to that trend line, it's still in the green. Sorry, that horizontal ray. With respect to the EMAs, it's kind of hovering around. The EMAs are kind of just hanging around together. So when that happens, I'm kind of a little bit cautious because there's no real long or short bias going on there. So I'm just kind of looking to see whether or not we're going to still go down in that channel, which could be very well a flag, or we are just going to just kind of keep trading this thing down and then it might pop out of the bottom like that. So with respect to 1 inch, I'm just kind of seeing what happens. Big shout out to Sam Thompson. He actually texted me last night and just directly and said, "Hey man, what do you think about this?" And I jumped on at that time because he actually charted it up and I liked what he charted up. I told him, "Yeah man, I like it." Then he sent me a small profit and then I've jumped on, and today I've told him I'm a big tank, which was a good one because it was a team trade. You know, it was one of those ones that your mate texts you and says, "Hey, look at this." He's a trader. He's almost a full-time trader, so I trust that, which is good. It's a good part of the community. The CFX has jumped massive. Last week, Mick Coe actually asked me to chart this up. I don't know. I think it was a Thursday night call. So he goes, "Hey, Damo, can you chart up CFX?" Now, CFX was down here at the time, and he shared some evidence of his wins. Now, if you have a look at this as a win, check the percentage on that bad boy. Not bad, eh? So that's pretty significant with respect to where that went. I'm not so worried about that now, so I'll delete that. But I'm still thinking that this thing could be forming a head and shoulders. So my analysis on this may or may not be right, so don't take it. You can do your own. But what I'm thinking is that this could be forming a bit of a head and shoulders that has hopefully a weaker right shoulder, in in which case it could come back down. I'm actually writing this down to 32. I think I put it in the chat earlier today. But it's one that's worked so far because I caught it up here-ish. And again, it's one of those bread and butter trades where it pumps and I catch the dump. I love that trade. So I'm hopeful that this little kick here is in fact a right shoulder and she's going to come crashing down, but I'm going to be cautious. CFX isn't that old a coin. If you zoom out on it, it's actually just had its pump from here, February of this year. Previously, it was worth next to nothing, so 0.01 cents. Now it's worth around 40. So if you would have caught this coin early days, you'd be singing. But I do think that there's got potential just to come back down there looking at the structure. It's even got potential to come down further. But I'm just kind of playing the cautious card, thinking that around 32 could be where it's at. So that's one to chart if you wish. This one here, I don't mind. Actually, no, this one here, that one there, this one here, I'll be looking for a change in structure. So if you look at this whole, it's come back down, this structure sits there. I'm thinking that maybe, just maybe, there's a chance it could come back. It could get caught here, which is through here as well. So what I'm looking for is a change of direction beyond that. If that comes down there, then you could consider that that's a change of structure, in which case that there could be a position perhaps from there down to there, which may or may not suit your trading style. It's not too bad a position, so it's one to perhaps watch moving forward on ADA. Adam, I like a little bit more. If you look at this position, this one here seems to be a little bit lower beyond all this stuff up here. Kind of seems to be yesterday's news, and it's coming back down. Where will it come back to? Well, anybody's guess, but there's a fair bit of EQ through here, which I'm kind of considering as a bit of a range area for it to come back to. So I'm actually not minding that position there, which you can see is a 3-to-1, decent percentage on it, which is around 3%, and a position size of 8. So I don't actually mind that one should we go short. What am I looking for? I'm probably looking, like if you zoom right in on this, you can see that it's kicked out. What I'm looking for now is some wicks to the upside, maybe something that could take a stop loss, that like the position that I've drawn there. Maybe it'll come back up and find these candles here. So what I'm looking for is some wicks first before it turns around. So I'm more than happy for this to come up here, maybe wick up a couple of times, and then I'll enter on the fall, which will still catch me in the startup position here. So that's something that I will be looking at, definitely that trade there as a position coming up. Not going to take it now because it's just too risky with respect to the direction it's going. But like I said, those wicks to the upside are going to be my confirmation to enter. Sorry, Lewis, I'm not keeping an eye on the chat, mate. Are you still pumping up?
No, you're right, mate. I'm just chipping away.
Okay, sweet.
Carry on.
Yeah, beautiful. There's another one there on AVAX. That one's actually currently got the wick to the upside, so I'm just waiting for the next hour to see what happens. Again, it's pretty much the exact same play. So Adam and AVAX are both doing the same kind of thing. So if you have a bit of a zoom out, you can see that there's potential for it to come back and bounce on this pink one. And you can see that my charts are pretty simple. I'm just literally looking at support and resistance, not really drawing trend lines religiously. You can say that it's broken and retested that trend if you draw it. If you draw that, there you go. Kind of like that a little bit more with the trend line. Break, retest of trend, perhaps spat out of it. But what's it going to do? So that one there is nice and juicy as well, should we be going short. But you're keeping an eye on what Bitcoin's doing. I'm happy to share these if anyone wants them. Magic, that's the one I shared. So I'll share it again just quickly for those of you that jumped on late. I shared this in my group chat, my own group chat with my team today. I shared it because, again, it's that pump position that I love. This was all pumped on one candle. I knew this had come back, so I shared it, entered it there. And yeah, so the take profit happened at that circle, and you can see that it's come all the way back, and there's probably even a position for it to ride back down again. But I wasn't on it at that stage because I got out there and I was doing other things, being a dad. So I didn't catch the move back up, but that's okay. Could be a move back down, but kind of thinking that it could. If we go short, this could definitely come back down as far as that. So that could be a position you want to look at and draw up yourself. So I'm just going to delete that. Just quickly get rid of this stuff as well. So that's there for you. Bitcoin we've looked at. You can see the Dixie is making a bit of a drop. So you can see it's got a bit of a flag happening through here. It's actually kind of breaking down now, which may force Bitcoin in the other direction. So we'll just see what happens. Always good to have a look at the DXY to see what it's doing. DYDX is doing a little bit of consolidating for my liking. I'm not really kind of looking at too much there, just for the purposes of this. I'll look at it, but just for the purpose of quick market scan, I'm conscious of time. Same deal here. Ethereum. What do we say about Ethereum, Louis? Is there something happening about Ethereum?
No, nothing. No, nothing significant.
Nothing.
Just
Right.
they were just in the chat. We are just talking about how NAV in Australia's.
That's where I saw it.
Yeah.
Litecoin I like to trade purely because it's really easy to see structure. Like if you zoom out on Litecoin on bigger time frames, so let's go back to the hourly. If you zoom out on Litecoin, it's really, really easy to see structural support resistance lines. So given the fact that that's pumped, I'm just going to leave that alone. I'll probably look to trade Litecoin back off that, if anything. Probably wouldn't enter just yet based on that candle, but one to watch maybe. See, I only have that list on the right there as my trading list, and then if something else comes up in the chats or whatever, I'll jump in and have a look. Sol, yeah, I'm not really convinced that Sol's not going to go either way, so I'm just going to leave that alone. And this one probably about the same. So yeah, so that'd be my trades that I'll be looking at tonight. I'll pump them into our chats, and you can support or deny at will. So yeah, that's my take. If anyone's got any questions on any of them, quick look at mask. Yeah, sweet. Okay, hang on. I'll go back. Sorry, I didn't see that. My assistant didn't tell me. There was a
click away for 1 second and I missed
a request. It's the right time. I got you back, mate. I got you.
Oh, there's a few chats in there I missed. Apparently, I wasn't at the bottom of my chat window. Oh, what a rookie.
Yeah, look, it's pumped pretty nice. I mean, when it comes to a trade that I would take, I'd be looking to bring it back down to about there. So there's a bit there.
Hey, Damien.
Hey.
The AVAX looks the perfect scenario for Jason's bat wings.
Oh yeah.
Yeah.
All right, we'll go back to that for a second. With respect to mask, yeah, I don't mind that. That's a bigger time frame. Let's have a look at a smaller time frame. Yeah, there just seems to be nothing there. So conservatively, it may be there. The move may come back to here. Let's just get rid of some of this stuff. Yeah, see, it may also be at that support area there now. So, look, if this broke, so let's just pretend that this is a support line. So let me have a look left and see if there's anything more. So let's just pretend that that's a support line there. So there's support, resistance, which would make sense. And now it's broken. If I was trading this on this time frame, I'd be looking at some element of retest and then go. No, I didn't draw it, but a retest and then a go. Something like that. In which case you could go down to smaller time frames and see if that's already happened or happening. Not really. Maybe there. probably not there. Maybe. So let's just get rid of that. It's a hard one because it's at that point where it could mean something that we don't know yet. But as a position, I'd be fairly comfortable taking that.
Yeah, I was just having a look. It's on this last pump up, it's pulled a fair way away from EMAs.
Yeah. Oh yeah. What's going on?
I'm looking on the 4 hour, but
I got the wrong EMAs up. Hang on.
But yeah, typically when things pull that far away and create that bigger gap from EMAs, they have a pullback to close that gap a bit. So.
Yeah, and with respect to EMAs, this blue one's crossed under the pink, so that's the 50 crossing under the 200. So yeah, I don't actually mind that. The problem is that this EMA, if this drops, this EMA will actually change slightly. So these are lagging, so that might look more like that, which would support that kind of area. But definitely wouldn't get too greedy. You can see this little bump of support there. It's that tiny little fake support. So I'd probably be lining up with that. So let's just see if I've done that. Yeah, my area is probably just to be sure, I'd probably just bring it up just a little bit. I'd rather take a little bit less in green than just miss out, because we've all been there. So that's as far as a move goes. You wouldn't get a 3 underneath that support line. So you'd have to accept the conditions that the 3 would be right at that line there. Yeah. I'd consider it, definitely. Let's all take it and get rich together. Just kidding. But yeah, no, I don't mind that. So thanks for sharing that. I'm going to move that up to my little watch list. So what I do when I find a trade is I'll drag it up here. I'll dump it into my faves, and then I will just hit symbol and it'll just alphabeticalize it. And that way I just only watch this list here. So yeah, I don't mind mask for a short. Head and shoulders on XRP, you reckon? And we're going to have a look at AVEX. Sorry, Chloe. John, I'll get you to share because I'm not seeing what time frame. Sorry, wrong time frame. This one? Hourly, John? Yep. Okay. So what the problem that I have with that head and shoulders is that if we're looking at, say, I'm presuming this is it.
Yeah, that's the one.
The right shoulder for me needs to be shorter than the left for me to be confident of a head and shoulders move. Like the textbook says that the right shoulder lower than the left will be stronger probability wise. So, and also the fact that that hasn't come from a massive move up, like that's not a really huge significant move up. Like if this move had come down from down there, that would have more credibility as a head and shoulders. I'm not saying it's not,
That's
but
fine.
it's not something I would trade at this point.
The
sure.
rule with head and shoulders is the right shoulder in an example like that, the right shoulder can't be higher than the left shoulder, which that is. Like it can be up to the same height as the left shoulder. Ideally lower is better for probability, but if it's higher than that left shoulder, then that's invalidated the pattern.
All right, and
right
just while we're here, I'll give you the lesson as to why. So ordinarily you've got a trend line, say, that looks like that, right? And what you're looking for is that head, and then what you're looking for is the break of structure, which confirms a lower high off that one. And that's why the right shoulder needs to be shorter than the left, because you're looking for that lower high change of structure, which creates that downward trend. So that's what you're looking for. So you consider that a breakout, that a retest, and that then gives you that confirmation that that head and shoulders is in fact validated. But it does come at a longer end of a run. So it's a continuation pattern. The lesson in the hub is really good if you want to look at the head and shoulders. It's under the reversal pattern section. So it's actually really good to watch. And it also talks about double tops really clearly as well. So when you've got a double top situation, what you're looking for there is you've got your double top, it comes down, and what the ideal double top will actually break trend as it breaks this one. So the second time it breaks the double top, it'll break that trend line, in which case you'll get confirmation and then you'll get the weaker and then you'll pop out of it. That's the textbook hedge double top that you're looking for. It doesn't always happen, but when you can see it, and especially when it coincides with trend lines or support resistance lines, etc., it's gold.
Cheers, mate.
No worries. And AVAX, Chloe, what did you say? It looks like the Batwing.
I was saying that AVAX looks like the Batwing setup, Jason's Batwing setup, you know?
Yep.
So the condition are lower high after trading minimum 20%.
Yeah.
So from the bottom up to the then is breaking trend, which we had.
Yeah.
Lower low after trend breaks, retrace to resistance, and we had. So yes, he's a Batwing, Jesus Batwings.
Yeah, I like that. I like that trade.
I'm picking up what you're putting down. I see it. It's good. It's a good setup.
Yeah, it is a good setup. That one, I like it. I like it a lot. Anyone know what the movie that's from?
I like it a lot.
I like it.
That was that Clint Eastwood one, wasn't it?
Yeah, Clint Eastwood and Jim Carrey.
Yeah, Men in Black. That's right.
Dumb and Dumber. Movie about us.
That's us.
What I have is a pretty decent one there. So I'm going to stop sharing and I'm going to pump these into the chats while Lewis does his magic. Oh, sorry, Daniel. Louis, you can do FTM for Daniel if you don't mind. He's just shared his chart.
Yeah, I'll just bring up the screenshot that he shared. We'll have a look at it. Can everyone see that?
Yep.
Yep, cool.
Yeah, similar, same. What is it? FTM, is it?
Yep, FTM, yep. Yeah, cool. You got that break, yep, cool. All right, I can see what you're looking at. Let's have a look on the old chart. I'll see if I get the same thing as you. Where is it, FTM? Oh, looks like I was looking at a bull flag on this. Oh, and that still looks pretty valid too. You got a bit of a key support level through here. Resistance, support, flip resistance, break back through, potentially finding support around here again. Was that on the hourly? I think Dan's was on the hourly. So yeah, I can see what you're looking at. You get the trend, you get the breaker trend. I'll remove that so I don't get confused with myself. We found resistance. We found a pretty solid top somewhere through that zone. Probably not really a significant historical resistance level. If we look at overall market structure, where's that putting us? Definitely bearish market structure. There's your high, lower low, lower high, lower low, lower high, potentially up here. So definitely bearish market structure overall when we look at the overall move. Yeah, I think it's probably not a bad setup that you're looking at there, Dan, because you're looking at that break at that level there. EQ, resistance, support, break, retest.
Yeah, it's good. It's a good one.
I quite like that.
Where's that target?
Well, that's an early rejection. That'd be a pretty strong continuation. So, you can't really trade that as a horseshoe, because for a horseshoe you want a deeper retracement up around sort of 618, and then your target you want to be like previous low. You don't have the risk reward in that for that sort of setup, because if you're trading off fibs levels, you want to clear your next fibs level as your stop loss. So you're not going to get the risk reward if you try and target previous low, unless you trade 2-to-1. I'd take a 2-to-1. I'd trade 2-to-1. So potentially that's all right for me, but that would be your first target level, because you got that whole zone sort of through there where we've had resistance in the past. And then your next sort of take profit could potentially be somewhere around that level, or even potentially through that zone there. So you're looking at about sort of 0.41 or 0.39. They're probably the three zones that I'd look at. God, look at that. Looks like one of my kids' drawings.
It is.
Beautiful. Nice clear. But yeah, I like that. That's a good trade. I think that's quite a strong short setup you got there.
Yeah. Can you share that in the chat?
This chart?
No. Is it Daniel's? Daniel can share it.
Yeah. Daniel's got it linked in the chat
He
already.
looks like Donny's chart.
No,
Is that
I
what
mean,
he does?
Like Lewis. He looks like Johnny's chart.
Does he scribble all over him like that, does he?
Yes.
Love it. Love it. It's me putting my thoughts on paper, just thinking out loud. Anyone else have anything else they want to look at?
sorry, Daniel, can you share that in the Facebook chats?
Oh yeah, chuck it in the Facebook chat.
Don't be shy, brother. Don't be shy. Yeah, has anyone else got anything else? There's something switch here, boys. Yep, hold up. Okay, that's not a chart. Yeah, so go nuts, Louis, if you got something.
Yeah, I don't really have too much, to be honest.
You're just carrying on my coattails tonight.
Just, yeah.
Fair enough, too.
I sort of ran in the door and jumped on this. I haven't really had much of a chance to chart today, so I apologize, but
no, that's cool. Yeah, so guys, like what we might do is we might just say, oh yeah, ETH. Can you just pump ETH out there from the chat, mate?
Yep. Let's have a look at the good old Ethereum.
After we do that, I'll just wrap up the recording and then we'll stay on.
Ooh. Break above that zone there. So we had a lot of resistance through there. What's that, around 1700 level? So we're market structure wise, what are we looking at? There's our low, we had a high, we had a low. So we're essentially squeezing into a bit of like a triangle sort of setup there because we were having equal highs. And then we went into like a broadening sort of wedge setup because you had that sort of setup there. So what we have now is if you get a strong retest off around this level where we have previous resistance, that's a good sort of long setup. That's very, very bullish. And this is obviously quite a key level when we look at it too, because the amount of times that we tested it the whole way through this zone, and then obviously a lot of people were expecting to short it because we had our liquidity grab here, which took out all of those short positions, and then we've broken up through, which sort of indicates that the intentions to move the market up. But obviously, like just to reiterate, if Bitcoin dives, Ethereum's coming down with it come FOMC on Thursday. So at the moment, yeah, that looks like a nice bullish setup. Retesting that EMA, everything's looking pretty strong. But yeah, just trade with caution. Like you can get away with, if you're entering a trade like that, a long position, ideally you probably want to, like your previous low, that's your previous low there. So you really ideally want to clear that. That's a big stop loss. So you probably want to jump down to like a lower time frame and look for some sort of other structure that you could get in off. If you would like a high risk sort of entry, you can potentially use EMAs as potential stop losses, or you can just use like current low structure, but that's high risk, very high risk if you're entering based off those sort of metrics. So, but yeah, realistically, like that's your safe clearance area. You could potentially look at that little pullback through this zone here. But yeah, depending how you want to trade, that's probably what I'll be looking at.
Yeah, so the thing is, are we short or are we long? Well, what I'm looking for is probably the hourly maximum. Looking for those wicks. Looking for the up wicks. The up wicks is what I'm after.
Were you looking at shorts on Ethereum?
I didn't look at Ethereum.
No, it's in the chat. Who was that? Morgan.
Morgan.
Short on it.
Morgs.
Oh, I don't really see. I just don't see any. I don't see any short there.
It could turn around though. Like that upwick could be the turnaround, and it could fall back to your box.
Could, yeah,
It
absolutely, yeah.
In which case, your stop loss should be above that wick. If your stop loss is above that wick, and what's that position look like? If you entered now, say, because he's already in, let's just for argument's sake say he enters now and the stop loss is above that. What do we got? 2.62. If you're not trading massive leverage, the problem is though, mate, if you have a look at that, see that percentage on the top of that stop loss, 0.67, it's actually a low percentage trade. So when you're looking at that stop loss percentage there, I try and make sure that mine says 3 or thereabouts. 2.5 would be a minimum. You're just looking at higher probability trades when you do that. You're also looking at if you're looking at trading, say 10x leverage or 20x leverage or something like that, with that position where it's just above your wick, you're basically shooting yourself in the foot, because that could come up and it could come up and hit that, well, like basically a 20% position, you're halving the size of your stop loss. So you need to be conscious of that. So if you go into 20x leverage and you get stopped out and you go, it wasn't even close. Well, the answer is it's because it squeezes your actual true position. So be careful with leverage. If I've got a position where like that one, I'll only trade 2-3x maximum.
When we look at I'd be really, really careful with the short on this, because when we look at volume, all of our we had a big volume candle to the downside here, obviously to try and break through that previous level that we were looking at, and it wasn't successful, so we had wick to the downside, and we're pushing up, and all of our volume on the push up is on bull candles, so big volume spike, and we had this this indecision candle in the middle as well,
and we've got a break and retest up.
Yeah, we had this perfect doji indecision candle, and after that indecision candle, we decided to push up with volume, and that's sort of where we're sitting at the moment in this zone. So we've pushed up off that 1700 support level with a lot of volume to the upside. So to me, short is quite risky at the moment.
Yeah, I've ended like midday, just kind of off the break and retest there.
Yep.
I was up a bit, but it's kind of come back on me and back turned. I'm just kind of thinking, do I just cut my losses early, or kind of wait for it to come back a bit and kind of get out, break even?
Where's your stop loss?
It was about, I think it's 1765 or 70.
Oh, so you're sort of
almost there, but
that sort of area now. Yeah. I don't know, is this the move now that pushes up to that level, or is this the move that comes up before a slight pullback, before a further continuation up? That's where you take the risk. Do you cut your losses now, or do you potentially come back into profit a little bit more and cut your losses down here? That's the risk you take. You just don't know. But at the moment, the volume is to the upside. And the move is to the upside, so being in a short is risky at the moment. So do you cut your losses now, or do you wait for it to hit your stop loss? Obviously the better option is to cut your losses now if you think that the market's turning on you.
Yeah.
Why wait? If you're not happy with the position you're in anymore, close it. Why do you have to sit there and wait for it to hit your stop loss? So
yeah, if you're feeling nervous about a position, you're better off just getting out of it.
Yep. That's my that's my
Yeah, if I'm not 100% in, I'm out.
Yeah, no, cheers. Good way to look at it, actually.
Just a quick one. Can we have a quick look at IMX for John? He's got hourly coming off resistance. The issue that I have, John, with that, I can see why you would have resistance above that little consolidation area.
All right, guys, I'm going to run. Thank you.
Thanks, Kyle. But
mate.
Where would you put your resistance and support?
Me? Resistance probably up here.
Mm-hmm.
support maybe here.
Yeah, I might bet.
So resistance, like this is on the 4 hour, so there. That's where we've met resistance on the 4 hour candle for since Saturday morning. We've had resistance there, so strong resistance level. We've had the dump. As far as support, like probably EQ zone through here. Like that's probably where I'd be looking at support.
Yeah, so I'm somewhat thinking the same. John's got that we are bouncing off resistance on a 1 hourly, so it's that current move. Obviously,
Yeah, it's the current move. It's the current move. It's short-term resistance.
Short-term resistance.
Yeah, so
but
they're there.
Yeah, but my take on that would be not entering that until it breaks the box. Like if you draw a line on the bottom of that as well.
Yeah, sure.
I wouldn't be entering that until such time as it comes out of that area.
Yeah.
It's just too static to really gain an entry. And look, if that little move in the middle of that hadn't come down and touched that line again, then you could be thinking that it's starting to push up and out. But because it's come down, I don't know if I'd take that trade. I think there's better trades. Better trades for a short than that one.
Yeah, that's a pretty risky zone you're sitting in there. Could go either way. And when you look at previous levels, like you've got a bit of an EQ sort of through this zone here, which means when you translate that across, like you're sitting in no man's land essentially at the moment. So
yeah, just be conscious of taking the right trade.
Yeah, absolutely.
I'm talking to everyone. Like, just be conscious of taking the right trade. Because if you are just taking a trade because it looks right, then you have to really be confident to press that button. And again, you might be trading with $1 or $5 or whatever, but one day you'll hopefully, the whole idea of this is to be trading with $500 or $5,000 or $50,000. So you need to get that mindset going now.
Yeah.
Cheers, guys.
Oh yeah. Okay. Sorry, Clayton. All right, so that was episode 23 of Leverage. Another cracker, Louis. What do you reckon? Not bad. Solve the world's problems.
Mate, this is what we do. We're here to help the people.
Yeah. So, guys, we're going to hang around. I'll just wrap up this recording. For those of you that are live on YouTube, please feel free to click down here. There's a little red button that will magically appear, and you will be able to subscribe to us. Thank you for joining us, and we'll see you all next week.
See ya.
See ya.